Hello and welcome to another Week Ahead interview where we take a look at the upcoming week and what moves currency markets could be making. Today I'm joined down the line by Mike Baghdady, head trader at Trading Traders. Mike, first up, can you tell me what events that are standing out this week that traders should be looking out for?
To me, the most important event that is going to be taking place this week, and it already has started, and that is the meetings of the Bank of Japan. They finished the first day of the meeting. It's a two-day meeting, and it is attended by, of course, the chairman of the Bank of Japan, Mr. Shirakawa, plus there are some members of the new finance ministry that has been just formed, Mr. Abe's government. And the reason this is extremely important is because there is a major shift in the Japanese monetary policy. Mr. Abe, who is the Prime Minister of Japan, has announced so very clearly in the last couple of months that he intends that the Japan to get out of the deflationary situation that is in and to go to turn the economy to go towards inflation. And he is targeting a 2% inflation. Now, as you know, that Japan has been in a deflation now for about the last 15 years, since 97. And there is only one way to be able to do that, and that would be to increase the money supply, to basically lower and bring down the Japanese rate of exchange, lower the yen valuation as much as possible, and this way, having such a lower currency, that would hopefully, theoretically, nobody knows if this is really going to be done, to go from a deflation towards a 2% inflation, but the issue and the policy is quite clear, and he is not mincing any words about it. So the statements that he has made is quite clear, and the policy of everybody in the Bank of Japan committee is basically that everybody is going to vote towards a loosening, or let's say printing Japanese yen. If you take a look at a chart of any of the Japanese yen pairs, you would see that the Japanese yen index as a whole, which is the basket of the Japanese yen, has dropped in the last, it started the drop as of November 15th. That was the beginning, which we call the structural failure or the trend change in the yen index was around November 15th. It has dropped about approximately 20%. The move that the Japanese yen has lost in the last 60 days is 20%. And that is far from the target that Mr. Abe is aiming towards, which is to achieve the 2%. For him to achieve that 2%, we are looking at the yen to be approximately towards par vis-a-vis the US dollar, to be looking at the yen towards the 130 or 125, 130 versus the euro. And so as far as a trader looking, we have been the move now, I think the trade for the next decade for any trader that is involved in the foreign currency would be looking at timing himself to short the Japanese yen versus the other pairs, which is primarily going with the dollar, the euro yen, and the pound yen, and particularly the Aussie yen. So the Aussie, the CAD, which are the fundamentally strong currencies, plus the U.S. dollar. These are the positions that I think it's going to be the trade of the decade.
This week looks like it could be quiet for the US data, although today is a public holiday. The highlights are likely to be the President's inaugural address and the release of key housing data. Will these events affect the markets at all?
Today, the market here in the States is it's closed, of course, so the liquidity is not going to be there. Tomorrow, we're having the Chicago Federal Reserve National Activity Index is due tomorrow, along with the existing home sales and the Richmond Fed's Manufacturing Index. On Wednesday, we will still have a very little way of any economic news. So Thursday, we shall bring us, of course, the U.S. jobless claim, and once again, along with the Conference Board leading and lagging indicators, and the Fed, the Kansas City Fed Manufacturing Index. And on Friday, this is going to be the key number that primarily everybody's looking for, is the new home sales. This is going to be the one that people are looking at, which is, and also the new starts, because that would indicate there is new fresh money now is coming into. They're breaking ground, they're buying permits, and so that would be the key mover, economic mover for this week in the United States.
Finally, looking at the UK, public borrowing data on Tuesday and Bank of England minutes and job figures on Wednesday could add to fears of another recession. Could this put further pressure on the pound?
There is. The market is anticipating a lot of pressure to be done, to happen on the pound. They are looking towards a possible recession, and the Prime Minister have also said that there are certain situations, economic situations in the United Kingdom that would require further easing. And as we speak right now, for the last, 2 weeks ago, the pound dollar was trading at 163. Now we're talking at 158.70. So we had a kind of a big move, and we should be looking probably for a further decline towards the 156. The situation in the economic situation in the United Kingdom is hard, and there is limited issues that they can do to vitalize the economy. And what's happening around the world now, then that's the reason I started the discussion with the Japanese yen. That is a premise. When countries begin to lower their currencies, that affects the other nations. So it's affecting the British pound. It's lowering its valuation against the British pound, and the only way that the UK can counter is by weakening its pound, and that's what is happening right now.
Thank you, Mike, for that great advice for our viewers. That's all from me, but make sure you keep clicked to Dukes Copy TV for more in-depth interviews into these data releases discussed today. Take care.